Good afternoon, everyone. Thank you for joining us for our session, Navigating the Cost Certification Package. I want to say hello to the viewers on the web, and thank you also for joining us today. We want to thank KML Law Group. They're making this webcast possible. They are our forum webcast sponsor. We knew this was going to be a popular session, so for those of you viewing on the web, we'll be taking your questions via Facebook today if you have any questions. And to everyone in the room, we're going to take questions during the session. So as we go, because there's a lot of information to cover, and as we get through every information. There are three sessions being webcast today, three multifamily sessions that are being webcast. And so I forget what I'm supposed to say next. We're recording this session, and it's going to be archived. It's going to be available online also afterwards. So getting that out of the way, I'll introduce us. My name's Carroll. I'm a Senior Development Officer with PHFA. To my left is Chrissi Gerbig. Chrissi came to us 2 years ago. She was with the developer prior to joining the agency. She's also a Senior Development Officer. To my right is Joanna. She is our Assistant Tax Credit Officer. And my name's spelled wrong on my name tag, just in case you need to email me. It has 2 R's in my last name. Just getting that out there on the record.
Okay, so please keep in mind that the information provided is for guidance only. Our purpose of this session is not to discuss development specific situations, but to discuss the agency's forms and requirements. And while we do provide guidance, our reviews do not indicate compliance with Section 42 requirements and cannot be relied upon for that purpose. And ultimately, the taxpayer as owner is responsible for compliance with all Section 42 requirements and should rely on their Section 42 experience, tax counsel, and accountants. Thank you. You ready?
All right.
So now we're
ready
going
to start with the handout.
So yeah, if you want to follow along on your handouts, we're going to go first through all the items that are listed that are required to be submitted with your place and service package. And this is a draft. It's going to be available on the web at some point. There's one out there now, but this is a new one. The red words are new things we've added. And here's the important thing, that you really do follow this list. And the guidance that we're going to try to offer today, because we really are trying to streamline the entire process just streamline it.
Yes, to make it easier. She actually said some of my intro there.
Sorry.
But that's okay. It never hurts to say it again. As she said, we have updated this to make it hopefully a little more clear for everyone involved, because it's a lot of information that has to be submitted for the place and service packages, and we understand that. So hopefully this will help clear everything up. We have updated the place and service package. It is now going to be an Excel document, and the final document will be uploaded to our website. I don't believe it's there now, Chrissi, but it will be. The final, it's not final. When it is final, it will be uploaded. I wanted to remind everybody, if you do have it saved on your machines anywhere, once it's final, you're going to want to get rid of whatever you have and use this new format. And as Carol said, we're going to go just through this list first, and then we'll go through the actual forms that are attached to this list. And then we can get started. I do what we call a cursory review with the place and service packages. And that basically just means I'm checking for completeness. When I open a place and service package at the agency, I check for the checks. I check to make sure all the documents on this list are included with the package. If they're not, you will get an email from me. I'm sure some of you have. Some of you have probably gotten several emails from me. And until I get every document that I've asked for, I hold your file to the side. It will not go into queue for senior staff review until I receive everything that I've asked for. So again, hopefully this more clarified version of our instructions will help everybody to get all the information they need right out of the gate. Right? Oh, my cover letter. I don't know that. I didn't write that on here. Okay, so now we're gonna start with number 1, which is one of the new things we've added. First and most importantly for me, please, to add, when you would be surprised how many people will send a place and service package to the agency with no cover letter, just a binder full of information. So please make sure you send a cover letter with not only the contact information, the email address, I need the phone number. It's a lot easier for me to do email. When I do send you a cursory review, please, I need hard copy responses, only because of the volume of cost certs that I deal with. If I have one person that sends me, if I need, let's say, 3 documents from you, and you send me 3 emails with 3 documents, and then I've got another person that sends me an email with 5 documents, and then it's very hard for me to keep track of. So, and I will try my best to put that in my cursory review.
So, I just have a quick question.
Yes.
So, the place and service packages are going to you or the development office?
They come to me.
Okay.
Yes. Now, if you do send them to your DO, they'll bring them down to me.
Okay.
Yes, absolutely.
If you have a big question, okay, we'll repeat them.
Okay.
If you're back there, you could just go to the microphone. That way that people on the web can hear too what the question was. I forget what yours
I
was
forget
already.
that. Oh, if they
Where do they
if
send
you
it?
address the place and service package to me,
Yeah.
and absolutely, they're going to come to me. If you address them to the DOs, they are going to find their way to me. So you can just address them to me directly.
Your cover letter would also be a good place to, if something like happened during the construction or something and something changed, understand this is the first time we're looking at your property. We didn't underwrite it. We might have seen it at carryover 10%, but chances are no. We've never saw your property. It'll help us if there was something unique that happened. We'll look at the application spreadsheet. We'll look at the 10% spreadsheet. But something could have happened. I don't know that. And I'm going to have to ask you the question. And then when I have to ask you the question, you're going to have to respond. And you're going to have to respond in hard copy. And so it just makes the process that much longer. So if there's, tell me a story if you have to. Whatever it is, put it in words. Anything that would help us understand what's going on that may have changed during your construction period or whatever.
Always better to have too much information.
Right, you can't have too much.
Agreed.
You're still on.
I thought I wasn't doing that.
Okay, so the next thing on the list would be your owner certification of placed in service form. We'll go over this in more detail. We're going to get into some particular forms. That is the next item on there, and that is the probably number one, what's the word I want to say? The one that everyone gets wrong.
Yeah.
That's pretty much how it is. Like the one that we have to have corrected over and over would be the owner. So we're going to go over it then, but that would be the next item up for order. So kind of like start it. It's pretty important. There's some dates and numbers on there that are rather important.
Okay, number 3 on our list are the certificates of occupancy. We need one for each building in the project. If they're issued a temporary certificate of occupancy for residential purposes, please make sure you include that. And please make sure the dates on your certificates of occupancy match the dates that you put on your placed in service form for new construction. Okay, so number 4 is essentially the meat of our placed in service package, which is the development cost cert and the independent auditor's report. We're going to actually go over those forms then, but what we added to this is if the development, as some do, have multiple buildings and they're not all 100% low income, we're asking that you submit a schedule that breaks out the qualified basis, eligible basis, and applicable fraction by building. And we require an original bound copy of the auditor's certification with the package.
Next on the list would be the letter from your equity investor, syndicator, whatever, stating that they've reviewed your cost certification, that they agree with your cost certification as it was approved, and it confirms the first year of your credit period. And sometimes you have more than 1 year of the credit period. So first of all, they have to put if you're deferring or not deferring the start of your credit period. And if you have 2 years of your credit period for several different buildings, please have them list out which buildings, which addresses are starting in which year. And that's another common error. And make sure that the first year of your credit period that they put in their letter agrees with the first year of the credit period that you're going to put on that owner certification of place and service form. They have to tie to each other. We check for the consistency throughout, and oftentimes they're not consistent. If you have commercial space in your property, please make sure, or something that's a separate condominium, we need a sources and uses statement for that area also. We also would need if you have a commercial or condo or area that's part of your building, we need the methodology that you use for any prorations, like any basis prorations. But the cleanest way to do it is have an entirely separate sources and uses statement, keeping that off of your residential cost certification.
Sorry, this thing's not working.
Oh, that's not working. There's a financial characteristics form that we ask that you complete, and we'll go over that form, but that would be the next form that should be in your package, and that gives us your commercial sources, your construction sources, your permanent financing. It's self-explanatory form, really. And now we're going to add a certification of subsidies, which is a requirement of the IRS. You have to submit it with your cost certification. You submit your certification of subsidies at 10%, and then we want to see one at cost certification. That needs to include all of your subsidies. We'll discuss that when we get to the form.
Before I go on to number 9, any place that says insert link here, we actually have sample forms included, but these are not going to be the real forms. We'll actually have links to the forms when we submit the final one that's posted to the web. So for number 9, the energy rebate analysis form is new for awardees in the 2016 program year. For the development information form, this is a form that essentially gives us information about the development, the management agent, the unit configuration, that kind of information. And again, we'll go over all those forms after we get through the instructions. Okay, so the architect certification of compliance with design requirements, that form hasn't really changed too much from our previous placed in service package. Number 12, we seem to have the most, or I shouldn't say the most, but we seem to have a lot of problems with the understanding of this one, so we did revise some of the verbiage in this form. And essentially what this is at application, when they agree to our threshold and selection criteria, the architect signs off on it, the general contractor, and the owner. So this form is actually recertifying to those things that were promised at application. So we're asking that you complete the recertification and then attach the information that you provided at application. So you'll have to go pull it out of your application and make copies, and then have the architect, the general contractor, and the owner reinitial and redate on that original certification that was provided at application. Whoopsie, sorry. Okay, so number 13 is we require copies of recorded deeds, or if the property is not owned by the taxpayer, the executed lease agreement and the recorded memorandum of lease, if it wasn't submitted with the 10% test. The settlement statement, also known as HUD-1s, for the purchase of each site, if it was not submitted with the 10% test.
And some of those items, when it says if not previously submitted, if you do like a cover or whatever, like a little table of contents or something, if you put like there that you previously submitted it, that could be helpful. Like that way I know that I can go look in the 10% test, like you didn't just miss it or whatever. I mean, I'm not saying you have to do that, but it's helpful.
That's also
Anything that'll be helpful.
Because that's also one thing I'll go looking for.
Right.
Yeah, that's another thing I'll go looking for. That's another thing I'll go looking for whenever I'm checking the package in, so.
So next we have a copy of the final AIA docs, and those are your construction documents. We have your G702, 703, and 704, the final. I don't need 20 of them, or every one you did for a payout. We just need the final. So the final should, the numbers on there really, again, should tie to your contracts. If they don't, you can tell me that back in the story in your cover letter of maybe why it doesn't. But it really, I can't think of any good reason that it wouldn't. But there might be a good reason. I don't know. So we need the application, certification of payment, the continuation sheet, and the certificate of substantial completion. Then we need your copy of your approved change orders. And again, I don't need a big thick stack for every change order, like all the backup for the change order. We need the 701. Now, if your 701 doesn't have a description of what was done, what the change was, then we would actually need some kind of support for that. What I find helpful, because I don't want to say most, okay. Some properties have a lot of change orders on them, and we need a brief description of what that is. Because again, we're looking for basis issues on those. First of all, they have to tie to all the, what's on your Excel spreadsheet. But a lot of times I feel like some people might forget to look at those for basis. So if you're, removing all this excess dirt or something from your site, that's not a basis eligible item. And so I just a lot of times don't see the adjustments made for basis. And again, that's then cause for us to make adjustments or cause for us to ask questions or whatever it may be. So a brief description on a cover sheet, especially if there's a lot of them. I mean, if there's not a lot of them, okay, I get it, but it's really very helpful to expedite the process.
And I just want to add to that if you're since we're asking for a schedule, when you do the schedule, if you put a brief description of what the change order involved, that will also be helpful. Okay, architectural contracts. We require copies of the architect contracts, including any amendments to those contracts. And the contract must match the cost certified amounts. If they don't, then we would need you to submit supporting documentation or some kind of schedule that outlines what those additional architect costs are.
Yeah, did you say like the reimbursables?
Oh,
Did you say that?
I
kind
did
of
not.
daydreamed.
I did
Okay.
not. Including reimbursables.
Well,
There you go.
that's typically the amount that you see over the architect contract or the reimbursables, and almost everyone has them. So a schedule is showing us those, because we're gonna ask. If the number doesn't match your contract, we're gonna ask you, what makes up the difference and the amount, from your contract, because the contract is one of the items. Did we get to that one? Or
Yeah.
you just did it.
I
Okay.
just did it.
Sorry. Next one's rent up. Ugh. So, rent up is, we go back 120 days prior to the date of your first building being placed in service. Rent up does not include groundbreaking costs. It could include grand opening or whatever. Yeah. So again, though, a schedule. We are going to ask for schedules from here on out. Ledger. So we need the date. We need a brief description of what it was. We need the amount and the vendor name. Be prepared for us to come back and say we're going to do a sampling of those scheduled numbers. We might want whatever you have at item number 5 or item number 8, or I don't know. We might ask for all of them. Supporting invoices for them. But for right now, we're just going to give it a shot and see how it goes with you just providing us schedules of your rent up invoices. Your rent up costs. And remember, there is a max on them. $1,200 a unit. I get that in furnishings a little. $1,200 per unit. And then the next one is your furnishings. Same exact thing. Schedule. So the vendor, what you purchased. We have to look at this for reasonableness. So I know oftentimes for an example, I may get an invoice from, some place. I don't know what they're called, but for $1 amount. But I like
Installment
$30,000, and I don't know what you bought for $30,000, or $50,000 or whatever. So we do need to see the breakdown. So give us a ledger that, you bought, there was 2 ottomans, and those ottomans were blank each or whatever. So make your schedule as detailed as possible. It'll expedite, and it'll be, that way we don't have to ask quite as many questions.
Okay, one of the other ones that we seem to have issues with are the legal fees. We would like you to provide a schedule that ties to the different legal fee categories on the cost cert, broken out by the categories shown here. We want the vendor name, data service, a brief description, etc. And you still have to include the invoices for the legal, but it's a lot easier for us than when you send us a stack of invoices like this if they're actually already tied out to the cost cert lines for us. Okay, relocation. We also would like, again, we would just like a schedule rather than all the invoices for relocation with the same type of information. And we just want to mention that relocation is not basis eligible. That's our the IRS's audit guide opinion. So if you disagree with that, then we would ask that you get an IRS private letter ruling for that.
And on relocation. That can, wait, I'm getting mixed up. Never mind.
Never mind.
That was one on rent up. Okay, can I go back and say
Sure.
something about rent up? So you can have
Come on.
staff costs in rent up because, you have staff doing the rent up. But it's probably not going to be allowed if you have like your CEO's salary in there or the president of the management company or something like that, because chances are they're not actually doing the rent up, like the intake with the resident, what you would consider rent up, when you're renting an apartment. So I was getting that a little mixed up.
Sorry.
We have a question. Could you
Can you
go to
please
the
go to the
microphone,
microphone?
maybe? Or is it inconvenient? I'll repeat your question. That's okay.
Look,
Thank you.
Look at that.
Testing. On the rent-up expenses, the 120 days prior to the first CO date, why is it only before the first CO date? Is that assuming that 100% of the building is leased up by the time the first CEO happens?
Okay, that's our housing management department's decision. They give us the guidelines on that. So unfortunately, I'm not really even sure I understood what your question was.
No, I think your question, they won't accept costs before 120 days. Anything after is fine, but not before.
But anything after the first CO date is okay?
That's correct. Up until your maximum, as long as they're legitimate, what we would consider rent-up costs, yes. And only up to your maximums also. Yeah, you can go past the first building. You might have 10 buildings. So yeah, that's not the cutoff. It's not just a 120-day period. That's when it begins. Thank you.
Okay, we good with rent up? Okay, so number 22, we require a copy of the mortgage notes, not the actual mortgages, for all the loans. And anything that is on the financial characteristics should have a corresponding copy of the mortgage or a copy of the note that is on the financial characteristics form.
Okay, the next one's a big one. It's your partnership agreement. We need all the exhibits and any amendments or addenda to the partnership agreement. You must include the agency required language for any reserves that you are showing on your cost certification. Okay. And it would be helpful, maybe even in your letter or on the front of it or something, to put where it's located in your partnership agreement. Because that's another, you've all seen them, and there are big, huge documents, and we have to read through them looking for your reserve language. We would like where your reserves, where you talk about that particular reserve. We're asking for our language to be there. Not to have your language like in section 7.07 and refer me back to section 3.03, because in 707 you're saying it can go to cash flow, and then I have to go back to section 3.01 to find, the agency language. We're not going to do that anymore. We want our language. It's listed in the guidelines. Your equity investors are all pretty familiar with it by now, and it's really only for the reserves that are on the cost certification. So for any other reserves that we're not calculating your credits on, it doesn't matter to us. But the reserves that you want included in that calculation need to have our language in that section.
And on that note, any reserves that are shown on the cost certification, we require bank statements providing evidence of those reserves. This is also another one that I generally recently have been kicking back a lot of emails on. At cost certification, place in service, your reserves must be funded. So there's no reason you should not be able to provide evidence of reserves. That is a big one that's also going to get your project held to the side until I get those bank statements. So it will keep your project out of queue for senior staff review. Please keep in mind that those bank statements need to be in the partnership's name. And if you send me a bank statement with a zero balance, I'm going to ask you to send me a bank statement with the amount that I need to see for the reserves.
If it's agency funded and
Oh,
we're holding
that's
the
right.
reserves,
Yes, I always forget that part too.
you could just say
Just
that
let me
on
know
there.
that as well. Yeah. Just let me know that it's agency funded.
We have a question. Thank you, Kathy.
If it's a insurance and tax reserve, and it's already been used, do you just want to see the transaction history there?
That would be helpful, yes.
Okay.
You mean for your first year escrow?
Exactly.
Right.
Yep.
Okay. So for the executed management agreement that we require, just make sure that it's signed and dated, because we get some that don't have dates on it and that aren't fully executed. And then along with that, if you received points for supportive services or special needs, we require the executed contract or a memo of understanding that indicates that supportive services will be available at initial occupancy of the development.
And on that management agreement, if it is not the agent that you said it was going to be on your application, it would either have to, because that's part of your development team, and when you submitted your application, you had your experience form. So if it's not that agent, tell us that story about it. But and you probably, well, you don't want to do that. Okay, it really should be the agent that you said it was going to be. But if that would change during the whole process, then make sure that they have been approved by the agency, that it's an agency-approved agent.
Okay, and along with the supportive services and/or rental subsidies, we would require the executed escrow agreement for the supportive services escrow that's on the cost cert and the rental subsidy that would be included on the cost certification. Okay, so number 28. The project history forms, again, we'll go into these later, but these are, I believe, they're required by compliance, and like I said, we'll go over those a little later.
All right,
Question?
Oh, I'm sorry.
You're asking for the executed escrow agreement for the supportive services and rental subsidy. What about the operating reserve?
What's the question?
You're, on number 27, you're asking for an executed agreement, escrow agreement for the supportive services and rental subsidy.
Well, typically, your operating reserve is a reserve you're holding, so you're saying that you might have an operating reserve in escrow, and
My investor partner is holding the operating reserve in escrow.
Oh, that's interesting.
So,
It's not in the partnership name.
all right, I'll give you the certification anyway. It just wasn't listed here.
But it's a reserve that's going to be on the cost cert, so it
Yes.
should be in the partnership's name.
Yes, it's in the partnership name, correct.
Oh, okay. Well, then you can,
Okay, yeah, it's in the partnership name, it's in the investors, it's, limited access through the investor.
whatever evidence you have.
Okay, yeah, but I'm just saying, you're not asking for the escrow agreement.
Because we don't typically see an escrow agreement on an operating reserve. We
Okay.
typically get a bank statement on that.
Okay,
But I guess if you have a case where your investors, they're holding it, but it's in the partnership name,
it's in the partnership name,
Yeah.
it's in escrow with my
then give
interest.
us, okay.
All right, thank you.
All right, we're good? We're good. Number 29, the $1,000 cost certification fee. Again, this is something that I look for whenever I open the place and service packages. The compliance monitoring fee, $800 per unit. It's not per low-income unit, it is per unit, every unit. The number 31 is a new fee, the energy benchmarking fee that we'll be collecting, $1,500. I'm going to kind of skip 32. We're kind of going a little bit out of order. If it's a tax exempt project, you're also required to remit 1/2 of the estimated allocate. That's not a cost cert, though, is it?
She said that earlier, and then I moved my microphone
Okay.
closer.
I have a question on this, though, because this isn't. They get billed for tax exempt. Sorry, I'm still kind of new at this part. The tax exempt projects get billed the remainder of their allocation fee at cost certification. So that's where the tax exempt would come into play in this scenario.
Correct. There's still some out there that you didn't have to pay half of your estimated allocation fee, and you won't get your 8609s till you pay it anyhow. So we'll tell you how much you have
Right.
to send us.
We'll send you a bill.
We'll let you know the amount that's due, and you'll get your 8609s then on the tax exempt financing, because they work a little different than your straight credit deals. We have
Skip back.
another new one.
Yep.
What's that?
I said skip back, now we're
Oh,
going
skip
backwards.
back.
I
Yeah,
cut
now
it.
back to number 32. Again, that's starting with program year 2016. That's it's a lot, it's a mouthful. The material participation, minority, women's and veterans businesses certification, part 2, with all the required supporting documentation applicable to the, okay, starting in 2016. If you received ranking consideration in this area, there is a form and all the support that must be provided with that. I believe that's one of our, that we're going to go over? That we'll go over then. But that's a new one. Anyone in here that had 2016 credits. Moving forward, not just 2016.
Starting in 2016.
Right. Okay, and then we're on to
Now we're on 30.
rural housing services developments must provide the actual cost of the development as submitted to rural housing services on your rural housing services form, your RD form. That's not a common document that we see, but that must be, if you had rural housing in there, we need to have that form with the costs, with your cost certification package.
Okay, another one is we need the original recorded IRC. If you have not previously submitted it either to our legal, if there's pen home, sometimes they go to our legal department. Otherwise, we need the original pen to paper IRC submitted with the cost certification. And then our 36 is our catch-all. In addition, we reserve the right to ask for anything else.
Even if you've already given it to us.
Correct, even if you've already given it to us.
Right?
And I just wanted to mention one more thing. Something that we actually removed was the Affirmative Fair Housing Marketing Plan that originally was a requirement of the cost certification. Unless you're a 2014 tax credit award, you don't need to submit it because we're collecting it at 10% tests. If you are a 2014 and haven't submitted your placed in service package yet, you will need to submit that Affirmative Fair Housing Marketing Plan. If you're using this and you forget, then it'll be part of the review memo that gets sent out.
Now, the next page deals entirely with pretty much when your cost certification package is due to the agency. And it is due 90 days after your last building is placed in service. We refer you to the section of the code for placed in service. I'm not going to read through all that right now. It's in there though. There's also, if you're deferring the start of your credit period, if you're not deferring the start of your credit period, there's different fees assessed for different scenarios, and it's been that way. There could possibly be ramifications if there is a loss of credits to the agency that would, if you do not maintain all of your credits and we have to recapture them, they go to a national pool, but there is a time frame that happens that they can't. So we kind of spelled it out in here in detail of what the fees assessed are. And we also had a little caveat on here that incomplete submissions or electronic submissions instead of hard copy will continue to incur the late fees until a hard package is received by us. And it has to come in hard copy. You all know how large these packages are, and it would crash our email system if we were to get these electronically. So we stay with the electronic theme throughout because we are dealing with a lot of cost certifications. I mean, that's what we do, and there are a lot of them. And there's a lot of information coming in, you know, if someone has a lot of buildings or whatever the case may be. So just, you know, keep that in mind when you can send it in like an application. Some do in the binders and mark them up, and that's, you know, okay with us. That's all right. So is there any questions about the individual items before we get into the different forms, like going over some of the different forms. Andy?
So the 90-day question is an IRS requirement, 90 days after the last CO, right? 90 days to submit the cost certification from the last certificate.
I really don't believe so, no. I think that's an agency requirement.
Has there ever been any thought, we struggled to get it done in 90 days? Get all the change orders, everything done, get it to the accountant, getting the syndicator's letter. I mean, it's a lot of paperwork, and it's not your fault. Has there been any thought to making it 120 days? Because I think that's maybe one of the problems is you guys are getting incomplete cost certifications because of the time window.
Well, I haven't been there long enough, Andy, to know.
But you're a powerful woman. You can get it done.
I am.
That's the flattery.
There's people in this room more powerful than I, though.
Is it something do you guys,
right. That's
as
right.
the practitioners who look at it, is that something we should discuss? Do you think it would be more productive? Or- Okay.
9 days is set because they usually come in late and they don't defer. People place their a lot of times in December, 90 days is March. You don't defer the start of your tax credit period in a year, we only have to June to take back any credit for the loss of the
Okay.
program. So it splits the 6 months, 3 for you, 3 for us. That's in theory how that was So the option on that is to defer the start of your tax credit period here, that some separate one on there. That's why we have to break it to fees. So if we were
I don't know, I can't tell. It also says here.
Okay.
And just to clarify, any credit loss, the agency, Carroll has referred to, possibly have a penalty. That doesn't go, obviously, we all know, we're behind in getting through packages. That isn't through any fault, so it has to be, we don't get your package until the credit card is off. We're not gonna penalize you, you have it here, but we just didn't get to it. We only penalize deals that don't even have the cost certification submitted to us until the credits are off. Don't be looking at us to have that. So I think a lot of it has to do with adjustment clauses, because everybody's going after the adjustment clause, so you want to you can get early collection,
Yes.
so you can get back. The offset to that is to choose to take the cost certification.
Okay, I'm going to try to repeat some of that for the web. Andy's, did you ask it in the microphone? Oh, okay. So the answer to Andy's question was that oftentimes they come in near the end of the year. And because they come in near the end of the year, we only have until 180 days, or basically the end of June, if there was going to be any credit loss. So therefore, the 90 days was put on there, 90 days for them, theoretically 90 days for us. And also, Linda did add the caveat that if you got it into us on time and it was, the result of that the credits could, if there was a credit recapture and it wasn't because your package was late, it was because we couldn't get to it, there's no negative assessment to a developer for that reason. Think I got that out to the web people?
I think so.
Okay.
Sounds good.
So now we'll go into the particular individual forms.
Breaks in 15 minutes.
We have break
We
in
have 15 minutes.
Okay, break in 15 minutes, so we'll go through, this one's mine, right?
Yep.
So this is your owner certification of placed in service date form, almost wrong on every property that comes in the door. So up at the top where this is going to be an Excel form too. There's going to be a link to it. Where the yellow areas are, they're the only places you can type now. So don't print that out and write like a bin number up there, because we assign the bin numbers. If you want, I know a lot of you like, you have to start like reporting. I don't understand the whole compliance side of it. But I know some of you need to have your bin numbers. If you want them in a particular bin order, then number them on this address line. Be complete. Call it building A, B, C, D, building 1, 2, 3, 4, whatever. Make sure we have this address, the city, and the zip code. Believe it or not, we don't get zip codes on these. Some properties have several different zip codes. We did just have one the other day where the developer had their zip code right, but the certificate of occupancy had a different zip code. We had to look it up on the United States Postal Service. The developer had it right. The certificate of occupancy was wrong. If you see that, you might want to, like, tell me a story about it, you know, or go back to your borough or whatever and say, hey, you have the wrong zip code on here, because that's going to be a time saver for us. Then we're going to have to research or even research what your zip code is. Philly, you have like too many zip codes, and I don't know what they are. So zip codes are kind of, that complete address is important on that form. So, and then of course, typically I believe it would be your accountant would put in the amount of credits for that particular building that they're assuming. Okay? So then on line 1, when you place for acquisition, okay, that is the date that, why don't I have that written down? Oh, for an existing building acquisition, if the building's occupied or suitable for occupancy, the placed in service date is the date that the building was acquired. Vacant buildings, this would be the date that is established for the date the rehab work was completed for the building. The place in service for substantial rehab can be set by the developer. Now, a lot of you guys remember when you set your date there, you have your 90 days, your clock starts ticking then. So you might want to keep that in mind when you're picking your own dates on that line. New construction, the date on there has to coincide with your certificate of occupancy. Please make sure it does. So many of these we've had to send back or question or whatever, or set aside because, I mean, I've seen them being one day off. And I don't understand that, but, you know, just like double check that. Make sure that those dates are all coincide with each other. Where are we at?
Total number.
Total number of income buildings. Okay. So if you have a mixed income building, that would be your market rate units and tax credit units. Then the number of units would be different on these two lines. But most of them, well, I mean a lot, are 100% tax credit, and the numbers should be the same on line 2. Same goes with the next line down, line 3. The only time they differ is if you have market rate units, 100% tax credit units, the square footages are the same. Lines 4 and 5 are only completed if your building qualified for acquisition credits. If it did, the only time those numbers are going to be different if there's market rate units in your property. If they're all low income, the numbers are going to be the same. This must tie to your cost certification prepared by your auditors. And the same thing goes with lines 6 and 7. Numbers the same unless it's not 100%. I'm going to look over at the bottom line on your cost cert, because this is after your boost. So it needs to tie to the basis after the boost, the 100, if whatever, the boost. If you got a boost. You didn't get a boost, then it's not even a worry. This is the first year of your credit period. Make sure that you're at letter from your equity investor and the date here, and I think it's also on your project history form.
Yes.
I'm not sure if you're giving us that date anywhere else in the package, but consistent. It's another, you're saying 2015 here, you're saying 16 here. They need to really be consistent. Your signatory line. Make sure that it's signed by an authorized signatory of the developer. Your ownership entity has to agree with your partnership agreement and the taxpayer ID. You'd be surprised how many don't have, it has to be the taxpayer ID for the partnership, not for your, umbrella company or whatever you want to call, your big, because we see that get mistaken a lot. I think maybe sometimes they're filled out by an administrative person or something that, is used to doing the EIN for your larger company as a whole and not your partnership. So we often see that number incorrect on there, the EIN number, and it has to all be has to be the correct EIN.
Ten minutes till break.
Are we on the cost cert?
Yes, we are.
Is this where we break?
Maybe.
Can you do the cost cert in 10 minutes?
No. I don't know. Can we?
We might.
You think?
We could probably do it in 10 minutes.
All right.
Okay. There's not a lot to say about this form, but there are some things. And one of my biggest pet peeves, there's a line on this.
Right
It
here.
literally
this one.
says, subtotal must equal contract amount. We're not kidding. It must equal the contract amount. And if it doesn't, tell me a story. It really should. If there could be two contracts. That could be the case, but I would have both of those contracts. But it really, really, that's important there. I know what happens a lot is you take the change orders and then try to put them up into the lines, but the problem with doing that is that we have limits. Your general requirements is limited to 6%, your overhead and profit, 2%, 6%. So that really has to match into your construction contract amount. Should total it. Maybe it's less. Now, if it's less, again, there's going to be a story to that, and you're going to have cost savings somehow or other, but at least tell me why it doesn't. I don't mean me. I do mean me. But just it's something that's incorrect often. And then change orders, I think we already touched on that. We need the G701, but then the ledger, and then that number should tie, and I'm going to look at your basis. Items outside contract, did we give them a place to list them now?
Mm-hmm.
A tab?
Yes. Right here.
Okay. So, because we need a listing of the items outside contract. Oftentimes, we'll just see a number there. And we have to know what those items are going to be. And so give us a schedule that tells us what the items outside the contract are.
New form. Yeah, this is a new form.
So we created this, what I call a free form worksheet, which means it's not protected, it's not locked. You can make this look however you want. We also would like you to use this for, if for some reason you have more other lines than we would give you on the cost cert, this is where we would want you to explain the backup for those other lines as well.
And on the other, they can actually type if they can't fit it, though, right?
Right.
Like, don't just let it say other. Like,
Right.
tell us what that dollar amount is tied to.
Right, it just, if you have a big, long description that doesn't fit here, then put it on here and explain what it is. Because you will not be allowed to change what these say. So that's why we gave you the other lines.
You just won't be capable.
Sorry,
She locked them.
it'll be protected.
She locked them.
You will only be allowed to key into the yellow fields. Okay, so along those same lines, when Carroll was talking about the construction contract, the same goes for the architect contract. These lines here should match the architect contract. And if they don't, then you should explain to us why they do not.
Don't put your reimbursables on another line because those architect numbers are also capped. You have caps on those, and we're going to move it anyhow, and it goes into your cap. So,
Right. I mean,
I kind of sound like I'm talking right out of both sides of my mouth when I say that. Make them tie to your contract unless you have reimbursables and then add them on there. But we understand that typically, so that it wouldn't match your contract. Does that make sense, what I'm saying? Okay.
well, okay, so if you put other down here that says architect reimbursables, because it's a line item that the agency caps, we will move it off of this line and we'll put it into this line and make sure that it falls within our development cost limits. So you should go back and look at the underwriting guidelines for the year in which you received the award and look at those development cost limits. Right, we good?
Yep, we're good. We're good. You have a couple new red ones there.
Oh, yes. So again, anything on here is new for the cost cert package. It might already be on the application package, but again, this is the first time that the cost cert package has been updated since 2012. So all the reds are new. So previously, even in here for our fees, it just used to say agency fees, and now we're asking that you break them out. And also, there's the construction monitoring fee.
Where's that?
Right here. And again, we want you to be aware that, so Carroll was talking about rent-up expenses and furnishing expenses. If you have a 60-unit building and you put $100,000 in furnishings because that's what you really spent, that's fine, but know that then don't be surprised that when you have a negative $40,000 adjustment on your cost cert to take it down to the maximum allowable of $60,000.
In other words, it's not fine. Don't put it
Well-
on there. Because, yeah. And she added furnishings and equipment on there because some people were getting confused, I think, and equipment was going into rent-up, and so we were always having to switch these around. It's furnishings and equipment is that line. It always was, but I guess we just didn't say that, like have those
Right.
words there.
Right. And then we added a lot of the passive house and the HERS and the capital needs assessment. The rest of it is pretty much the same. You can see there are some things that we never consider basis eligible, which is why there's nothing in yellow, like the reserves, some of the syndication fees, the tax credit monitoring fee. So if there's not a space for you to put it, don't put it in there.
And then we did add the agency energy benchmarking fee that you have to pay to us. That's down under the other now. And
Whoops. And this is where you would list all your sources. So your total here has to match your total here.
make sure we have a note for all of those sources. And here's something that I hear often. Say we send out a draft spreadsheet and there was a credit, at cost cert, your credits are based on the lesser of your reservation, your qualified basis, or your need. And it seems like, but everyone would be like, Carol, I had plenty of basis. And I'm like, I know, but you didn't do your need calculation. So your sources minus your uses, you didn't, the credits are your gap filler. So you might have had a ton of basis over here, but it was your need. It came down to a need calculation. So it's kind of important. I thought we had a thing for their, no, we didn't, for their need calculation. No. So it's really just sources minus your uses to get your gap. I'm just trying to picture it all in my head. It's
If any of you have received a draft cost certification prior, the first page is our need calculation.
That's correct. So just keep that in mind on the spreadsheet, that I understand you might have a huge base, a lot of basis, but it's not just basis. It's also need at this stage of the game.
So then down here, you would take out anything that would be affecting your basis, like grants, commercial space that the tenants are charged to use, historic tax credits, non-qualified units that are higher quality, and your energy tax credit, and we ask that you give us the calculation for that basis reduction.
And that's probably a good breaking point. Because we're at 3:30. Is it 3:30 break time?
3:31.
Okay. So hopefully we
You'll come
kept
back.
you entertained enough and
That you'll come back.
engaged is the word, not entertained. Engaged enough that you'll come back for the second part of our session.
4 o'clock.
4 o'clock.